When you start to consider accounting principles, the topic of generally accepted accounting principle, the GAAP, comes up immediately. And the primary thing to keep in mind is that these principles are just a group of low-level rules that have been set out to guide companies in the United States in the preparation of their financial statements. And by having and using these standards across the nation, all companies can indicate their profit or loss to investors. For examples, the shareholders can take the financial statements for two different companies, prepared separately by two different accountants, and compare them to analyze and track information. So the consistency of using GAAP makes this possible. But this reporting method is not foolproof, of course, because no system is because of human error, greed, and other reasons that might prevent full transparency. But the international counterpart of GAAP is IFRS, the International Financial Reporting Standards. And since 2002, the groups have been working to build a unified set of standards that apply to both the United States and international companies. Now let's study revenue.